Hey everyone, welcome back. Today we're going to take a deep dive into Berger Paints India Ltd's Q2 FY25 results. We've got, the usual stuff, the official report, the press release, all that. But we've also got some interesting analyst questions that I think are going to really make us think. It's like we're putting a financial puzzle together, and those questions are like those edge pieces that help you see the bigger picture.
Yeah, I like that. I like that analogy. It's interesting to see all those different perspectives, they come together to tell, well, I think a more complete story.
Exactly. So before we really get into it all, let me ask you this. Okay, so imagine you're a shareholder in Berger Paints. What's
Okay.
like the one thing you would want to know from these results? Keep that in mind as we go through all this, because I think there's some interesting stuff to unpack here.
Yeah, great point. It's all about context, right? Speaking of context, Berger Paints India Ltd released their unaudited Q2 FY25 results on November 5th, 2024. Everything's been reviewed and approved by the right people. And their auditors, SR Batley Boy and Co. LLP, have given it the official nod with their limited review reports.
Okay, so we know it's all legit. Just a quick reminder, too. Berger Paints may be headquartered in Kolkata, India,
Hmm.
but they're actually playing on a global field, which we'll get into a bit later. First things first, though, let's talk numbers. Their revenue pretty much stayed flat compared to this quarter last year. Their press release kind of blames the long monsoon season and flooding in key markets.
Yeah, it's crazy how these external factors like weather can really impact a company's performance. But here's the thing. Even with all that monsoon stuff going on, Berger Paints thinks they actually gained market share.
Hold on, so they're saying they did better than their competitors even when things were rough? That's kind of impressive, isn't it?
It is. I mean, it suggests that maybe their competitors might have taken a bigger hit from that weather. And that's not all. Their gross profit margin hit 40.4%. That's the highest it's been in 10 quarters.
Okay, that number, that definitely caught my eye. Can you explain that for me like I'm five? What makes that profit margin so good?
Okay, so think of it this way. For every 100 rupees worth of paint they sell, they're keeping 40 rupees as pure profit. After they cover all the costs of actually making the paint, it's a sign of a healthy business. Could be strong pricing power, or maybe they've just gotten really good at managing their costs.
Okay, that makes sense. And even with all that increased investment in manpower and advertising, their operating margin stayed right in that 15% to 17% guidance range. So they're not afraid to spend some money, are they?
Yeah, it seems like it's a strategic move. They're taking a bit of a hit in the short term, but they're definitely prioritizing those long-term growth initiatives and building that brand. It's like
Yeah.
it's like they're planting seeds for the future, even when there's a bit of a storm going on.
So they're not panicking, they're just playing the long game. I like it. What about volume? Did they sell more paint overall?
Yeah, they did see single-digit volume growth, but it's interesting when you look at the breakdown. So premium and luxury paints, they did really well, but the mass market products, those actually dipped a bit.
Hmm. So are we saying people with more money to spend on the fancy paints, are they just like less affected when the economy's not doing so well? Like is a new coat of paint just lower on the list when you're worried about paying your bills?
It's a good question. I think it could be a bunch of different factors. Maybe those higher end customers, they're just less sensitive to the price changes. Or maybe they see those premium paints as an investment, a long-term investment in their homes. It's definitely something to keep an eye on.
Yeah, it's like they're saying, hey, even if things are a bit shaky, people still want their homes to look good.
Exactly. And one more thing that should make shareholders happy is their net cash position is really strong. Even after paying dividends, they're in good shape.
Okay, so they're not just spending money left and right, they're managing it well too. That's
Yeah.
good to know. Now let's hear from the big boss, Abhijit Roy, the MD and CEO. He said that this quarter was a bit muted, which, isn't really surprising after all the stuff we've talked about. But he says he's expecting a much better second half of the year in terms of both revenue and profitability. What's making him so confident?
Well, he pointed to some areas where they're doing really well, specifically their waterproofing, construction chemicals, and wood coatings. So it's like they're not putting all their eggs in one basket, right? They're branching out to meet more of those customer needs.
Smart move. Spread the risk, right? Anything else he mentioned?
Yeah, he also talked about their network expansion, which I think is interesting. They're adding new retail points and those cool color bank tinting machines to reach more customers. So they're not just sitting back and waiting for things to improve. They're going out there and making it happen.
It's a very proactive approach.
Yeah.
He did acknowledge the monsoon's impact, but he also sees some good signs in the market. Sounds like a good balance of caution and optimism.
Yeah, I agree. Now, let's shift gears a bit and talk about standalone and consolidated results. This is where it gets a little interesting.
Okay, well, hold on. Before we get into that, can we make sure everyone's on the same page first? Can you explain the difference between standalone and consolidated for us?
Absolutely. Think of it like this. Standalone is like looking at just your own personal finances, while consolidated is like looking at your whole family's finances, you know? So standalone focuses on just Berger Paints operations in India, but consolidated includes all of their global subsidiaries and joint ventures. Like you're adding up the income and expenses from everyone in the family.
Got it. So what's the story with these different financial statements, though?
Okay, so on the standalone side, their revenue was down slightly. EBITDA decreased by 5.4%, and net profit dropped by 6.3%. And that's for the first half of the fiscal year. But when you look at the consolidated picture, which includes all those international ventures, their revenue actually went up a bit. EBITDA did decrease 7.2%, but net profit is only down 3.6% for the half year.
Wait a minute. So the consolidated numbers are actually better than the standalone ones. So that means their international business is doing something right. It's like one kid's bringing home A's while the other ones are struggling.
That's a good way to put it. Yeah, their international operations are helping to balance out some of those weaknesses in their home market. It's like a safety net.
Okay, this is getting interesting. Let's take a closer look at those international operations, see what's happening over there.
Yeah, let's do it. It's kind of a mixed bag, which you'd expect with global stuff. Their Polish subsidiary, Bolix SA, they had good revenue growth, but their profitability went down a bit because of some one-time project costs. It's probably
Oh,
worth looking into that more to see if it's a recurring problem or just a one-time thing.
yeah, makes sense. And what about Nepal?
Their Nepal subsidiary, BJN Nepal, they had a tougher time. They saw both revenue and profit decline because of an economic credit crunch, which just reminds us that these global events can have a real impact on a company. But there is some good news. Their cash flow actually improved.
Oh, so maybe a little glimmer of hope for a turnaround there. Are there any other international subsidiaries we should know about?
Yeah, there's STP Limited. They had slow revenue growth and some profitability challenges because of rising costs for raw materials and employees. So it seems like they're dealing with some internal cost pressures.
So yeah, a mixed bag internationally, some good, some not so good, but definitely an important part of the puzzle. And I want to go back to those analyst questions for a second. They're like those little puzzle pieces that help us see the bigger picture.
Yeah, I agree. They often point to the things that investors and analysts are really focused on.
Right. They were asking about the things that are driving revenue growth. And we know from the management's comments that the shift to those premium products and that network expansion are both playing a big role. What about the profit margins? The analysts were definitely interested in that.
Yeah, they wanted to understand how Burger Paints is balancing investing in growth while also keeping their profits up. We've seen that their great gross profit margin is kind of being balanced out by those investments in manpower and advertising. It's that classic trade-off, spend money now to potentially make more money later.
Kind of a gamble, but it seems like they're being careful.
Yeah. And of course, we can't forget about the impact of those bigger market conditions, which the analysts were definitely interested in. We've already talked about the monsoon and its effects, but they also asked about rural demand and infrastructure spending.
Yeah, those are big factors for a company like Berger Paints. Rural India is a huge market, but the economic conditions there haven't been great. And then there's the question of whether more infrastructure spending will help the whole paint industry.
Exactly. And finally, the analysts were curious about the competition. Burger Paints didn't give us specific numbers, but their claim of gaining market share tells us that they're holding their own against those competitors.
So they're not just surviving, they're actually doing well in a tough market. That's a good sign. All right, we've covered a lot here. What are your big takeaways so far?
Well, what I find really interesting is how Burger Paints is handling all these challenges. The monsoon, the economic stuff, the competition. They're not just hiding and waiting for it to all pass. They're making moves to set themselves up for growth. That focus on premium products, international expansion, network expansion, it's pretty impressive.
Yeah, and they're doing all of that while keeping their finances strong. But we're not done yet. There's still more to this story. So join us for part 2, where we'll dig even deeper into those numbers and explore what it all means for investors.
Welcome back. Ready to keep digging into these Berger Paints results. We've got our financial shovels ready.
Always.
Huh?
As we go through all these numbers, it's like we're financial detectives looking for clues. Sometimes the most interesting things are the ones that don't quite fit at first?
That's what makes this so fun. Okay, detective, what have you found? Well, I'm looking at their standalone financials for the 6 months ending September 30th, 2024. And there's this one line item that's, well, it's pretty big. It's other expenses. It's a lot of money, almost 905 crore rupees.
Whoa, that's a big number.
Yeah.
It's like finding a secret room in our financial mansion. What exactly is in those other expenses?
Mm.
Could that be where we see that increased spending on manpower and advertising they talked about?
It's a good thought. Remember, they're really trying to boost their brand and market presence. So things like advertising and manpower investments, those costs might not be in those, more obvious categories like cost of materials or employee benefits.
And remember how Abhijit Roy, their MD and CEO, was talking about that urban initiative?
Hmm.
He talked about setting up their own stores, working with franchisees, and taking on those specific projects to be more visible in cities. All that stuff must be expensive.
Right. Yeah. Exactly. Setting up those stores, training people, managing projects, all that would definitely add to other expenses. It's like they're renovating their whole business, and, renovations always cost money.
So are they spending too much? Or is this a smart move for their future? Will it'll pay off?
Well, it's kind of like when you buy a house that needs a lot of work. You spend a bunch of money up front, but later on you can sell it for a profit or just enjoy living in a nice house. It's too early to say for sure with Berger Paints, but we'll have to see how those investments affect their revenue and profit growth in the next few quarters. But one thing's for sure, they're focused on long-term growth, not just making as much profit as possible right now.
That's a really important point for investors to understand. It's not just about quick wins. Now, there's another interesting detail in their financials. Remember, they're the Paul subsidiary and that credit crunch they were dealing with? Well, their cash flow statement tells a different story. Their net cash flow from operations for the half year was actually positive, about 490 crore rupees.
Ah, you're right. Maybe things in Nepal aren't as bad as they seemed at first. That positive cash flow means they're actually, making money from their core business. Even with all those revenue and profit problems, it's like they found a way to keep the cash flowing even when things are tough.
They're resourceful. Maybe they're really good at managing their working capital,
Yep.
being on top of collecting payments or keeping their inventory low.
It's possible. Cash flow is often a better way to see how healthy a company is financially. More than just looking at profit, it shows us how much cash is actually coming in and going out. It's like having a high-paying job but not actually having any money in your bank account. You need both to be truly successful.
Great analogy. Speaking of cash, let's look at Berger Paint's overall cash situation. Their net cash position went down from about 692 crore rupees in June 2024 to 242 crore rupees in September 2024. That's a pretty big drop.
You're right, it's a big change. But don't forget, they paid out dividends during that time. That probably explains a good chunk of that decrease. It's like they're sharing some of their profits with their shareholders. The good news is they still have a net cash position, which is a good sign for their financial stability.
So no debt worries here. Investors love to see that. Okay, we've done a deep dive on the financial side of things. Now let's zoom out a bit and talk about what's happening in the market that's affecting Berger Paints.
I'm ready for it. What kind of things are we talking about?
Well, remember those comments from the management? They talked about that long monsoon season, and especially the flooding in those major markets like Andhra Pradesh, Kerala, West Bengal, Gujarat, and Maharashtra. These aren't small towns. We're talking big population
Well,
centers.
yeah, no wonder their sales were affected. Those floods probably put a stop to a lot of construction and renovation projects in those areas. People have bigger things to worry about than a fresh coat of paint when their homes are flooded.
And the effects could last a while. All that dampness, potential for mold. People might be hesitant to start painting if they're still dealing with the aftermath of the floods or worried about money.
Yeah, it's like waiting for the dust to settle before you start a home improvement project. You want to make sure everything's dry and stable first.
And then there's the whole issue of rural demand. We know that rural India is a huge market for paint companies,
Hmm.
but the economy there has been, well, a little shaky lately.
Absolutely. Rural demand is affected by so many things, like crop yields, how much money farmers are making, government policies. It's complicated. If farmers are struggling, they're probably not going to spend money on things like paint. They need to feed their families
It's
first.
like Maslow's hierarchy of needs, right? Paint isn't exactly a basic need.
Mm.
And then on top of all that, we have inflation. Prices for raw materials, transportation, everything's going up. It's putting pressure on profits for the whole industry.
Yeah, it's a real supply chain squeeze. Companies like Berger Paints have to be careful, trying to manage those rising costs without raising their prices too much and losing customers to cheaper competitors.
Yeah, they're in a tough spot. Speaking of competition, the management kind of mentioned it, but we don't have all the details. What's the paint industry like in India? Is it a big battle?
Oh, it's definitely competitive. You've got domestic and international players all fighting for market share. There are the big names like Asian Paints, Kansai Nerolac, ExxonMobil, and then all those smaller regional brands. It's crowded.
So it's not just about handling the economic stuff, it's about competing too, which makes their claim of gaining market share even more impressive. How are they staying ahead of the game?
Well, we've already talked about some of their strategies. First, they're really focusing on those premium and luxury products. Remember how those were doing better than their mass market stuff?
Right. It's like they're saying, if you want quality, you got to pay for it.
Yeah.
And it seems like it's working.
It does. They're betting that people with more money are less affected by economic changes, and they're willing to pay more for those high-quality, unique products. It's a smart move when things are uncertain.
Focus on the people who are still spending money, even when times are tough. Makes sense. What else are they doing to stay competitive?
Well, remember how they highlighted the strong performance of their construction chemicals, waterproofing, and wood coatings segments? They're basically creating a more diverse range of products to appeal to more customers.
Yeah, it's like not putting all their eggs in one basket. If one product line isn't doing well, the others can help balance it out.
Exactly. And we can't forget about that network expansion. They're adding new retail points and those color bank tinting machines to reach more customers, both in cities and rural areas. It's a classic strategy. Make it easy for people to buy your products.
So they're playing offense and defense, strengthening their core business while also trying new things.
They're definitely not standing still. They're taking risks, but they're smart risks. And their strong financial position gives them room to handle those short-term challenges.
Speaking of new things, let's talk about their international expansion. We've already discussed those mixed results from their subsidiaries in Poland, Nepal, and other places. What's their plan for the global market?
Well, it's clear that international expansion is a big part of their growth strategy. They're looking beyond India for new markets and opportunities to make more money.
Makes sense. But as we've seen, the global market can be unpredictable. They're dealing with different challenges in each country, like currency exchange rates, political changes, economic slowdowns, local competition. It's not easy.
You're right. International expansion is complicated, but the rewards can be huge if they do it right.
That's why it's so important to understand the details of their international operations. We need to look beyond just the big numbers and really understand each market.
I agree. For example, we talked about those one-time project costs that hurt their Polish subsidiaries' profits. It would be good to know more about those costs. Are they going to happen again? And what are they doing to prevent those kinds of problems in the future?
Good point. And in Nepal, their cash flow improved even though their revenue and profit went down. That suggests they're managing their working capital well, but is that sustainable?
Exactly. We need to figure out if they're just delaying payments or using up their cash reserves, or are they making real changes to their operations that will bring in more cash in the long term?
These are the kinds of questions that investors should be asking when they're thinking about Berger Paint's international strategy. It's about understanding the potential rewards, but also being aware of the risks and challenges.
And how they're dealing with those risks. International expansion is a marathon, not a sprint. It takes time to establish yourself in new markets, adapt to local cultures, and create a brand that people like.
It's like planting a garden in a new climate. You have to take care of those plants, protect them from the weather, and be patient while they grow.
That's a great analogy. And just like with a garden, there will be problems along the way. The important thing is to learn from those experiences, make changes, and keep going.
So as we finish up this part of our deep dive, what are the big takeaways for investors?
Well, we've seen that Berger Pants is dealing with a lot of different challenges. The monsoon, economic uncertainty, competition. But they're not just waiting for things to get better, they're actively trying to grow.
Yeah, they're investing in premium products, expanding their network, offering more diverse products, and entering new markets. They're playing offense and defense at the same time. And they're not afraid to take risks.
And their finances are strong, which gives them the flexibility to handle those short-term challenges. They don't have a lot of debt, and they're making money from their operations.
But, as always, there are still questions. Will their investments lead to future growth? Can they handle international expansion? How will they adapt to the changing market, both in India and globally?
These are all questions we'll continue to explore in part 3 of our deep dive. We'll connect all the dots and give you even more insights and things to think about as an investor.
So stay tuned. We're going to bring it all home for you.
Welcome back, deep divers. We've gone through the financials, we've looked at the management's plans, and we've checked out the overall market for Berger Paints.
It's been a real journey, hasn't it? I think we've uncovered some really interesting things, some things to watch out for, and also some positive signs for their future.
Yeah, for sure. Now it's time to put on our investor hats. Let's try to answer the big question, is Berger Paints a good investment? Of course, we can't give financial advice or anything, but we can definitely give you some things to think about. Absolutely. Let's start with their track record, right? They've consistently done well financially over the years. It's not like they just, popped up out of nowhere. They have a history of success.
It's always good to see. The balance sheet is solid, they're making money, and they've been paying dividends to shareholders. All good signs.
Yeah, definitely. But they're not just sitting back and relaxing. They're actively investing in growth, both in India and globally. It's like they're saying, we don't just want to survive. We want to thrive and reach new heights.
I like that. Their focus on those premium products, expanding their network, diversifying what they offer, those are all positive things, right?
They are. But got to remember, no investment is completely risk-free. The paint industry, like a lot of others, is tied to the overall economy. If the economy slows down, demand for paint could go down too. A rising tide lifts all boats, but a falling tide can leave some behind.
So we have to consider those external factors, and like we saw, those unexpected things like that monsoon can really mess things up and hurt their sales. It's like, planning a picnic and then a storm suddenly comes in.
Right. You got to adjust, adapt, maybe even find some shelter.
Exactly. And their international expansion adds a whole other level of complexity. Currency exchange rates going up and down, political instability in other countries, economic slowdowns in those markets. All that can affect their profits. It's like sailing in uncharted waters. You have to be ready for rough seas and unexpected obstacles.
Absolutely.
So it's not a sure thing. But there's definitely potential for growth. It's kind of like looking at a promising new company. Strong fundamentals, ambitious goals, but also some risks to think about.
I like how you're putting it together. It's not a simple yes or no. You got to weigh those potential rewards against those risks.
Okay, so what should investors be watching for in the next few quarters? What are the things that could really make or break their success?
Well, I'd be paying attention to how those investments in, manpower and advertising actually affect their revenue growth. They're spending a lot on those things, so investors will want to see if it pays off. It's like planting seeds. You got to make sure they're getting enough sun and water to grow.
And what about those rising costs for everything?
Yeah.
That's a big worry for the whole industry. Can Berger Paints manage those costs without hurting their profit margins or, raising prices too much for customers?
Yeah, that's a key challenge for them. And then there's that rural market. Can they figure out how to reach those customers, especially if demand in the cities weakens? That could be huge for them.
And of course, we'll have to see what happens with their international expansion. Can they replicate their success in India in other markets? Or will they run into problems? I'll have to wait and see.
There are a lot of moving parts, that's for sure. But that's what makes it so interesting. It's like we're watching a company evolve and adapt in real time.
Yeah, like we're watching an experiment unfold.
Yeah, exactly. So as we wrap up this deep dive, what's the one thing you want our listeners to remember?
I think the big takeaway is that Berger Paints is at a turning point. They're facing challenges and uncertainty, but they're also taking advantage of opportunities and making big moves. Whether they succeed will depend on how well they execute their strategy, adapt to changing market conditions, and navigate that complex global landscape.
They have a good foundation, a clear vision, and the resources to achieve their goals, but it's not going to be easy.
It's a story that's still being written, and we're all watching to see what happens. Thanks for joining us on this deep dive into Berger Paints. Hopefully we've given you a new way of looking at their story.
And remember, investing is about asking those good questions, looking beyond the surface, and making smart decisions based on your own research and your own risk tolerance.
Until next time, keep exploring, keep learning, and keep diving deep.